Hey guys, happy Tuesday, April 1st, and this is not an April Fool's video. I'm going to go through with you all of the DD I've been doing for my own trading plan regarding GameStop, the convertible bonds, and more importantly, after everything we've been hearing on social media, what I want you to know that everybody is missing about these convertible bonds, how arbitrage and hedging works. If you want to know the way institutions are going to be trading this thing, and how that might impact any plans that you have for your trading plan, stick around for a couple minutes. We're going to go deep into the details, key information you do not want to miss. Everything that I'm going to talk about with you over the next couple minutes is 100% entirely my work, my DD, my opinions, and my understanding of convertible bonds, arbitrage, and hedging. If you are a professional bond trader and you find anything incorrect in here, feel free to reach out to me. I'd love to know if you find any mistakes, but I can say pretty confidently that everything that I'm about to share with you guys is bulletproof as far as being factual. Over the last week, I've been sharing all of this info in my Discord, in our GameStop trading room, but as far as the broader YouTube and Twitter X audience, I wanted to wait until April 1st when we got the notice, the 8K that came out today after the market closed, that the bond offering was completed. And now we have confirmation that it was the complete $1.5 billion aggregate principal amount. Getting right into the presentation and the information I want to convey to you, my DD, my way that I am looking at this play based on my understanding of how institutions are going to trade these convertible bonds and hedge them. There are a couple of key points that we are going to be going over in the next few slides, and that is that understanding arbitrage and hedging to properly understand how institutional traders will be trading GameStop in this new landscape that includes convertible bonds is vital to you. You must understand properly how the institutions are going to be gaming these new convertible bonds. Arbitrage, hedging, and the potential of conversion all may cap upward momentum on GameStop stock. Now, when I say that, I am making the assumption that GameStop is going to be investing this money at some point in Bitcoin. So the outcome of those three things, arbitrage, hedging, and any potential conversion in the future, is going to be largely dependent then on what happens with the price of Bitcoin between now and 2030. And the other thing that I'm just seeing over the last week is a lot of bad social media takes and a couple of really good ones. And you guys know who you are, and I'm going to try and shout you out on Twitter X because there are one or two people that are putting out accurate info. Most of the rest are either way too bullish or completely do not understand what is going on now with this new landscape of convertible bonds and the hedging that is going to occur behind them. I'm calling this GameStop's great speculative bet, the $1.5 billion of convertible bonds at 0% coupon to buy Bitcoin. If successful, it is a forward-thinking move to supercharge the company's balance sheet and drive significant earnings growth, capitalizing on Ryan Cohen and GameStop's belief that Bitcoin's value will increase over the next 5 years, transforming the company into both a crypto and tech-savvy value-creating powerhouse. And if you believe in GameStop and you believe in Bitcoin, then I don't think anybody is going to argue with this. If you don't believe in Bitcoin, you might have a valid counter argument for it. In my last video a week ago when GameStop announced this plan, I already went over both the upsides and the downside risks of this plan. In this video, I'm not going to be talking about the risks, but if you missed that video, you should be aware of them. Please go watch it. We already talked in a previous video about why GameStop and Ryan Cohen issued convertible bonds instead of spending existing cash to potentially buy Bitcoin. But I want to expand on that here just for a second. You see, I believe that Ryan Cohen understands the current shareholder value disconnect dilemma the fact that the fair value of GameStop is far below the current price. And he is actively working to fix that, both in shoring up the brick and mortar operations, as well as pursuing this new strategy with convertible bonds and Bitcoin. With the issuance of $1.5 billion of convertible bonds, Ryan Cohen is preserving the cash that they have for other uses, potentially for future M&A activity. He is also making a speculative bet, being bullish on Bitcoin. If this speculative bet on behalf of GameStop works out as they hope it does, then the company's valuation, the fair price valuation, will be brought up from where it's sitting right now, around $13, up closer to where we're at, $22, $23, possibly even higher, depending on what happens with Bitcoin. And that's the part that I can't tell you with 100% certainty what is going to happen to Bitcoin. But boy, if Bitcoin keeps going up over the next 5 years, so will that share price, because that Bitcoin going up, if they invest in it, is going to drive earnings, which will drive fair value recalculations. And just so we're all on the same boat, because people love to lie and misquote me, a fair value is a mathematical finance computation. That does not mean that it is my price target. I hope you guys one day understand the difference between someone's price target and what a fair value calculation is, which is just math based on earnings and a reasonable PE ratio. The key thing you need to know about what is a 0% convertible bond as compared to a regular bond is that GameStop's 0% convertible bonds offer no coupon, but the potential for equity-like gains if the stock price rises, trading traditional fixed income bond-like returns for enhanced upside opportunity tied to keywords here, volatility, and the conversion value. The reason that convertible bonds offer equity-like performance is demonstrated visually here on this very traditional convertible bond diagram, where you can see the further to the right we go as share price increases, the red line, which is your bond price, goes up, and it starts, once you cross that conversion price, it starts going up in lockstep with the underlying equity price. You get equity-like returns above the conversion price. Here's what you need to know, though, about how these institutions that are buying these bonds are going to be trading it. You hear people talking now a lot about convertible bond arbitrage. What does that mean? It is, as it says here on the screen, an investment strategy that exploits pricing differences by buying the convertible bond, which they've already done or will continue to do in the future as it trades among big private institutions, buy those bonds, and then short the underlying stock to profit from both volatility and any mispricing that might be going on out there in the market between the two. Now, I know that a lot of people think that the shorting and the hedging is already done and that's all you got to deal with. That could not be further from the truth. And we're going to get into that more in just a second. But let's keep nibbling at this here just a little bit more. I want you to know that convertible bond arbitrageurs attempt to profit regardless of the direction of the stock. A lot of people I hear out there saying on social media are saying that the bondholders only want GameStop to go up from now on. They're in for $30 no matter what. That's not really the way it works. These guys are really agnostic about price. Their success, though, depends on market conditions, volatility, again, that V word, you're going to hear it a lot, and the effectiveness of their hedging strategy. How convertible bond arbitrage works is a very well documented thing, and you can go look up things like trading convexity and volatility. You might not understand it all, though, if you're not super up to date on convertible bonds or how arbitrage works. So over the next couple slides, I just want to give you a very high level pass over to explain this stuff to you. And then maybe I'll put a link in the video description with some white papers on this stuff if you really want to get nerdy and go do your own DD, which you should. Anyways, this is very important stuff. if you're buying or holding GameStop. Understanding this stuff and how the big guys are trading it is going to be very important to you. I keep hearing people say the bondholders from now on only want the price to go up. They got their initial hedge in and they're on board for the rocket. It doesn't really work that way with convertible bond arbitrage. As I highlighted for you in red here, the institutions that are running this convertible arb strategy view the underlying ticker's share price, GameStop's price, as less critical than the volatility and the bond to stock pricing relationship. They are in this play because it has high volatility. That is why they're here. Would they love for it to go up so they can convert and pocket even more profits? Absolutely. However, with proper arbitrage strategies, these guys are going to make profits over the next 5 years, whether the price goes up or down, because they're trading these bonds and shorting the stock to make money on volatility. More on that in a second. Let's talk though first about what is hedging. If you're a big private institution and you bought a bunch of these bonds and you're in it for a convertible arb trade, you're going to immediately, once you buy the bonds, hedge those bonds for a delta neutral strategy. Hedging involves going short the stock. You guys already know that. You saw that last week. That was the initial hedge. And you could also, in addition to going short the stock, you could alternatively gain short exposure with derivative products like options or swaps. Derivatives offer leverage, lower capital requirements, or easier adjustments because all of this hedge is going to be adjusted every single day. Easier adjustments than shorting the stock directly. Maybe shorting the stock becomes expensive. They have other alternatives to hedge. All they need is short exposure. And as I just said, those hedges will be adjusted dynamically on a minute-to-minute, hour-by-hour, daily basis, whatever is necessary as the stock price moves up or down to keep their hedge in balance with the changing delta and whatever amount of bonds that they own. As we just mentioned, they took out an initial hedge, and you saw that shorting action from that initial hedge happen on March 27th, and that is largely why the price went down. There were some other things like call options being unwound, you know, the hedging that had gone on in the options market. A lot of reasons why the price went down, but the big impetus of that was these big bondholders establishing their initial hedge last week. But it is dynamically managed and it will change, and there will be more shorts coming in, especially as the share price goes up. A delta neutral hedging strategy will have these bondholders increasing their short position on GameStop as the price goes up. And I don't know if everybody realizes that. The higher GameStop prices go, the more shorting is going to be applied by the holders of these bonds. Not because they hate you, not because they're trying to stop your short squeeze, because that is the very definition of a delta neutral convertible bond hedging strategy. In fact, it's going to get so bad if the price goes up that the further it gets above the conversion price, the more short they're going to be, up to the point of being fully short. If the conversion was into 50.24 million shares, they could be short 50 million shares if the price of GameStop is well above that conversion price. If Bitcoin starts going up, and it will start driving GameStop's price up, you're going to see the short interest increase because of this delta neutral hedging strategy. Do not be misled over the next coming weeks, months, or years from people telling you that a short squeeze is blossoming, because this is just convertible bond arbitrage. And remember, if they decide to convert, they can instantly wipe out that whole short position. In fact, that's how you unwind your hedging the day that conversion happens. So be very careful and remember what I'm telling you today about why the short interest is going up if GameStop's price is going up. It all is going to have, largely, not all, largely going to be related to convertible bond hedging. By the same token, if GameStop's price goes down, they will lighten up on their short position. That is that dynamic management of the hedge according to what's happening with the delta. If you can start grasping this concept, and then whatever's going to happen over the next weeks, months, quarters, or years related to short interest is going to give you a little bit more peace and understanding what is going on as that short interest gets bounced around with the share price. I've heard some people say that the institutions know this thing's going up, otherwise why would they take a 0% bond? Why would they get no interest payment for 5 years unless they're convinced that the price is going to the moon? Because they don't care about the price. They care about volatility, and GameStop is a volatile stock, just like MicroStrategy is, and they will make money no matter which direction the price goes based on their hedging strategy, arbitrage, and the high volatility. If GameStop were ever to become a low volatility stock, these guys might lose interest in even holding these bonds. But that's a discussion for another day. We're not in that part of the discussion right now, or probably anytime in the near future. When GameStop is working up the initial deal for these bonds, certainly the interest rate that they're willing to pay is part of the negotiation as they're feeling everybody out about who might be willing to take some of these bonds. The interest rate is part of the negotiation, and GameStop knew that based on the volatility of their stock and the relative safety of their balance sheet, having $4.6 billion in cash, that they could get away with 0% coupon. And the people that are buying the bonds are okay with that because they are more interested in the volatility and if Bitcoin goes up, the potential conversion at a profit, than they are about the coupon rate. In a similar fashion, I'm just going to say something that's probably unpopular, but they don't care if it's Ryan Cohen or GameStop that is issuing these bonds. It's nice that GameStop's got a nice solid balance sheet and no debt. That's a good safety net for them. But they are in this play for the volatility, not for GameStop. They will be making a bullish bet with GameStop on the future of Bitcoin, and everybody wants it to succeed. But whether or not GameStop's price moves up or down over the next 5 years, these bondholders are going to be making money every single week, every single day off of the volatility and their hedging strategy. Imagine a scenario where GameStop starts trading up close to $29, $30, $32, $33, and these guys are increasing their short position, delta neutral hedging. What would they love to have happen when they get a full short on their bonds? They'd love for the price to collapse back down because they get to keep their bonds, and now they get to collect profits from fully stacking their short position, and the price collapses back down. They make money as the price collapses on that short position that they built up, and then they will unwind the short position because the price came down. And then it's rinse and repeat time, ladies and gentlemen. It's not going to be the shorts are scared. It's not going to be where are they going to find the shares. They're going to hedge all the way up by going more and more short because they have this safety net of what? Conversion for the full amount of shares, instantly wiping out their short position and unwinding the short. If you're seeing that short interest go up and you're hearing people say the shorts are scared now, where are they going to find shares? You know, you're probably listening to someone who does not fully understand what is going on with the convertible ARB hedging. There is a lot of ongoing debate about will these convertible bonds be dilutive? And I can't give you a 100% certain answer, but I can give you a high probability answer. Yes, if Bitcoin goes up and GameStop's price goes up, they likely will be dilutive. That is the whole point of doing a convertible note, offering up shares in the company in exchange for cash. And it lets the company preserve cash. Otherwise, they could have just gone out and got a regular bond, right? The point of doing convertible bonds is to offer equity as an incentive to bring these bond buyers on board. They want the potential future conversion income, if everything works out as they hope. Shareholders should assume that dilution from GameStop's convertible bonds is a future risk contingent on the stock price, of course, exceeding the conversion price of $29.85. But as of today, it's not an immediate threat. If GameStop goes up, it could become something to be more concerned about. If we ever get to the point where GameStop's price is above that conversion price, then, in the United States these days, there are two most likely outcomes: physical settlement with shares, or a combination settlement where they pay the bulk of it in shares and then anything above the strike price might be paid in cash. I can't tell you what GameStop's going to do if we get to that point. It depends on what their strategies are and what the financial condition of the company is. They're going to make the best decision for the company. They don't care what you are worried about as far as dilution goes. They are going to do the best thing for them. And my way of viewing this, since they issued convertible notes, is it's probably going to be shares to redeem these bonds the day that we get to that point. Now, that's not necessarily a bad thing if you're trading this stock and you're able to take some gains, or if it just keeps on going up. Do you really care if there's a little bit of dilution if the price is flying up to 30, 35, 40 bucks or higher? I don't know where it could go, depending on what happens with Bitcoin. The point of this whole play is this speculative bet from Ryan Cohen is people will be willing to take a little bit of dilution if Bitcoin goes up and drives the value of the company and the share price up. The other thing that's going to come into play, just to give you a heads up in advance, on any quarter where the company has a positive net income, you're going to see not only basic earnings per share on the income statement, but you're probably now going to see right underneath it diluted earnings per share. When the 50 million or so shares that are potentially convertible here are going to be added into the share count and calculated by GameStop, it will reduce the reported earnings per share, because under GAAP accounting rules, they need to factor in, what's it called, if converted dilution. If converted, what would the earnings per share drop to? And so you will see that, and that may change the reported earnings per share that you see from GameStop or from analysts in the news as GameStop is reporting future quarterly earnings. The number will be lower because of diluted earnings per share, whether the price is above the conversion price or not. The last thing that I want to touch on is, what is a soft call? At the beginning of this video, in this slide deck, at the very bottom bullet points here, we have the soft call date, April 6, 2028. Soft call price is 30% above the conversion price, or $38.81. I've heard a lot of people explaining this incorrectly, so let's just go through the basics real quick, and please fact check me. A soft call allows GameStop to encourage bondholders to convert the bonds into shares after that trigger price is met, without forcing a cash redemption. If GameStop trades above $38.81 for 20 trading days out of 30, they can issue a soft call, and then the bondholders can choose to convert to shares to lock in their profits, or else GameStop may redeem the bonds at par value. And if the institutions don't respond to the soft call, GameStop could redeem the bonds at par value. Receiving that par value is less upside to the bondholders than conversion. So that's what we mean when we say that GameStop issuing a soft call incentivizes conversion. If you're a smart bondholder, you're going to convert because the price is over $38.81. You don't want to get that par value down there by doing nothing. The purpose of the soft call, just so we're clear, is to incentivize the bondholders to take the shares. That will wipe the debt off of GameStop's balance sheet, increase the shares outstanding, because the institutions are probably going to sell those shares once they get their hands on them. But, it does say in the paperwork that GameStop does retain the flexibility to settle conversions with cash, shares, or a combination. So I'm just going to acknowledge that that is out there. They have the flexibility, but the reality of what happens when companies issue soft calls is they want to incentivize conversion. And that's what I would plan on if I was you, if we get to that point. Don't let people mislead you and say that GameStop doesn't want to dilute you. They're just going to give them cash. Probably not. Possibly, but probably not. The last and most funniest thing that I hear people say is, the bondholders are so on board, they can't wait to own GameStop at $30. Once it goes over that conversion price, they're going to convert and diamond hand those shares. Probably not, guys. I mean, these bondholders are in it for the volatility play, for the arb trade. It is a safe bet that there are more arbitrage buyers than directional bet buyers of these bonds, because the volatility is where the money is at. They can make money whether the price goes up or down, versus someone who's a directional bet bond buyer only could win if it goes up. So which ones do you think are buying this? The ones who can make money both ways. That is the bulk of these buyers, arbitrage players. As I say in the middle of this slide here, profits will be realized from trading around the position volatility and or bond price appreciation over the next 5 years, not necessarily holding on all the way to conversion. They might even exit the play well before conversion if they've finished out whatever trading strategy they had and maybe nothing happened with the share price. I think it is very naive and very hopium-ish to be telling people that the bondholders are on board because they know it's going to 35 or 40 bucks. They're going to make money every single day, no matter what the price does. That is a very naive presumption to make about how these institutions think. And it just does not sit with any facts. If you talk to any bond trader, that theory that you have, your little hopium theories, are not going to hold up. It works well in the retail circle where people don't know what's going on, but talk to some bond traders and become educated about how these institutions are thinking about this play. As we finish up, the key takeaway, same thing we started with, for you to be most successful in properly understanding how this play changed, is to start understanding now that there are new traders in this stock, and they are focused on convertible bond arbitrage, and the higher price goes, the more they are going to short. That could act potentially, depending on what happens with the price of Bitcoin, as a cap on where the price gets stuck. Doesn't mean it can't break through it. If Bitcoin keeps going up, you'll break right through that cap. Don't you worry about that. But you could get stuck there for a while because the short positions keep growing and growing and resisting that retail buying pressure. Be very careful what you're hearing on social media. And in fact, I encourage all of you to sit down with a CPA or a professional bond trader and fact check anything in this video. I welcome your comments, questions, anything you guys want to know about what I covered today. Drop me a comment down below. I love to hear from you. Thank you for watching. I hope you learned something today, and I hope it is useful in you making profitable trades in GameStop. This is the information I'm going to be using. You don't have to use it. I put in all the work. I thought I'd share it with you. Happy trading, guys. Enjoy the rest of your week. I am Tony Denaro, and I will see you on the next video.